Later this evening, Donald Trump will deliver a joint address to Congress, the first in his second term. Being someone who speaks his mind in an intensely divided context and who appears in a hurry to execute with razor focus before midterms, it will be a closely watched address and should be interesting if you're not easily offended by the lack of humility. Hello, welcome to Global Business Insights, where we look deeper at the main business stories. Today in this episode, we continue to look at some of the February global economic data coming in and what we are learning. But first, some of the main headlines. Stocks retreated yesterday, extending February's sell-off after additional tariffs were confirmed, dashing hopes of a last-minute deal. According to Trump, reciprocal tariffs will start on April 2, but very importantly, 25% tariffs on Canada and on Mexico will start today. All three major indexes which traded higher earlier in the session closed down. The S&P 500 posted the biggest loss since December. Also late yesterday, oil prices fell to a 12-week low on reports that OPEC Plus will proceed with the planned oil output increase in April, and worries concerning U.S. tariffs hurting global economic growth and oil demand also impacted prices. Pfizer CEO Albert Bourla said yesterday that it might move overseas manufacturing to its existing plants in the United States if required. The comments come as drug makers brace for higher tariffs on pharmaceutical imports. Bourla said at the TD Cowen Healthcare Conference that companies with an existing manufacturing network like Pfizer in the US will be able to cope better with new tariff hikes as they're able to transfer more production to the country. Taiwan's semiconductor manufacturing has announced a $100 billion investment to bolster chip manufacturing over the next 4 years in the US. TSMC, which supplies semiconductors to the likes of Nvidia and Apple for artificial intelligence applications, pledged its support to efforts to make the US an artificial intelligence hub. Last month, a multi-billion-dollar infrastructure project with Oracle, OpenAI, and SoftBank was also announced. So far, over $1 trillion in major tech investments have been announced since the new administration pushed for more in-country investment. As a new reality dawns, Europe is gearing for huge additional spend on defense as the US wallet looks about to be zipped. The stocks of European defense companies soared yesterday. The Stocks Europe Total Market Aerospace and Defense Index had surged almost 8% on course for its biggest one-day jump in about 5 years. The index had already risen more than 30% so far this year. Rheinmetall, for example, closed the day up 13.71%. An initial euphoria in digital asset markets from plans for a U.S. strategic crypto reserve turned to skepticism, triggering early losses in cryptocurrencies. Losses also worsened throughout the day as investors awaited the confirmation on 25% tariffs on Mexico and Canada, which came later in the day. Welcome back. In the US, the chatter on recession has been revived again by observers who see hiking tariffs as an own goal. To be clear, analysts have been mumbling about recession for almost a year, as the then Treasury Secretary Yellen kept assuring that none was in sight. But this time the noise is louder. Indeed, the Atlanta Fed's GDP Now tool projects GDP fell by 2.8% in the first 3 months of 2025, down from an earlier forecast of a 1.5% decline. But considering policy shifts at play with different timing and diverging effects, Jerome Powell, I believe, is right to say we simply don't have any clarity yet how a combination of higher tariffs on imports and the kinds of retaliation scenario we're going to see, capital investment inflows, cutting fat in governance, and tax cuts all within a year will affect the economy. All this as the Federal Deposit Insurance Corporation is also reported to be planning to roll back a Biden-era policy that ramped up the scrutiny of large bank mergers to boost more capital inflows and efficiency, and so many other initiatives going on. Whatever we are seeing now in the data must, to a large extent, still be debris from a previous administration. US markets are spooked by the uncertainty and at best cautiously optimistic, with sentiment already very jittery before the tariff issue came up. Tomorrow, Wednesday, thousands of delegates will gather in Beijing for the annual meeting of China's National People's Congress, at which we may also hear more on how much fiscal stimulus the government plans to provide this year to help the economy and dispel deflation. Manufacturing PMI, that's for China, February yesterday, rose more than expected to 50.8 from January's 50.1. Back to the US, the picture still mixed at best on the data front. The ISM manufacturing PMI showed that business activity in February remained steady at 50.3, down from the previous 50.9 and below estimates of 50.5. The poll also suggests that declines in subcomponents of the PMI was fueled by President Trump's tariff threats on imported goods, tariffs again. But the S&P Global US Manufacturing PMI rose to 52.7, also in February, better than expected, and January's 51.2. The reading also signaled the second consecutive month of expansion in the sector and the strongest growth since June 2022. At the end of 2024, we had a divergence with a weak Europe and more robust growth in the US. In the first quarter, the European economy seems to be slowly coming back, helped by slowing inflation, while the US seems to be plateauing somewhat, nervous on what a new administration could mean amid what many are already calling policy missteps. On the data, yesterday we got EU manufacturing still lingering in recession, but still a 2-year high, signaling early stages of recovery. Flash Eurozone inflation numbers for February also provided some relief, easing slightly for the first time in 5 months. Inflation fell to 2.4% from 2.5% in January. This new trend should be enough for the European Central Bank to cut interest rates by 25 basis points when it meets later in the week. Still on PMIs, this time in South Africa, the manufacturing sector remained under pressure, with the ABSA Purchasing Managers Index declining slightly by 0.6 points to 44.7, marking the fourth consecutive month of contraction and confirming that the sector has yet to shake off the weak momentum seen at the end of 2024. Persistent cost pressures, fragile global trade, and local logistical challenges all continue to be headwinds. Back to the US and the address later today. Apart from the controversy on the wisdom of tariffs, another issue is around the Department of Government efficiency and its methods. I thought I could share a few thoughts, having been directly involved in many similar rationalization exercises. It is important to build in time to get buy-in as much as possible, avoiding the shock therapy or chainsaw methods we are seeing playing out in the US public sector. But I must add, it is so much easier to churn out reports and studies showing opportunities to eliminate waste than to implement the simplest of cuts that are necessary, even more difficult in a public sector setting where fat has amassed from decades of pandering to many side agendas. Almost every leader I know has announced that they will eliminate waste and enhance efficiency. Still, less than 5% actually are able to do so, simply because it's easier said than done. Musk, as an outsider, comes in with an advantage, I must say, with little political capital to lose, no salary, no political ambition, only his chainsaw and the many eager beavers diving into the data. With an unstructured approach, there will be more mistakes, but Musk says they expect this and will do their best to manage the damage. The opposition will not be as accommodative, and rightly so, and they are closely resisting and scrutinizing all the claims being made. Is Musk right to say the public sector is overdue for an audit to cut out huge waste pipes draining resources? Yes. And is Elizabeth Warren right to say Elon Musk does not care about efficiency and wants a government that is so lean that the rich get a free pass with lighter regulation? Maybe to some extent that could also be true. The motives can be noble, but the process needs to be right and not resulting in a demolition of important checks and balances and institutions. It remains a good thing that a process like this is well scrutinized very closely. The good thing is that this is also a time-limited exercise. At the end of it, Musk could be more isolated as number one villain, or he could be a hero. Still, Musk is also the man helping the US to bring back astronauts marooned in space, another space to watch. Now to other business headlines and looking at what else is moving the major international markets. ShopRite Holdings, South Africa's biggest supermarket retailer, reported a 9.9% rise in half-year earnings as customers stocked up on food during the festive season. Group sales grew by 9.6% to $6.91 billion as the retailer's core business, Supermarket South Africa, achieved sales growth of 10.4%. Saudi Arabia's state energy giant Aramco posted in the financial year 2024 net profit of $106.2 billion, which was 13% lower year-on-year due to the impact of lower oil prices and volume sales of crude oil. Its dividend was also cut from $124 billion to $85 billion, a blow to the Saudi budget. According to data from the British Retail Consortium, annual UK food inflation rose to 2.1% in February, up from 1.6% in January, marking the first time it has gone above 2% since September 2024. Asia Pacific stocks were mostly lower, somewhat mixed, led by Japanese stocks, which fell 1.2% as at close, as US tariffs on Mexico and Canada became effective. Already, we are seeing retaliatory actions. Canada has vowed 25% tariffs on $150 billion worth of US imports, while China also announced 10 to 15% tariffs on US agricultural imports, also targeting US firms with retaliatory action. Trump had doubled the levy on Chinese imports to 20%, claiming Beijing is not doing enough to stop the flow of fentanyl into the US. Beyond tariffs, markets are also watching the latest US jobs data. Bureau of Labor Statistics survey on Friday is expected to show the US added 160,000 jobs in February, a jump from 143,000. An upside surprise will help the Federal Reserve case to pause easing for longer as it watches the impact of higher tariffs on inflation. US futures were, however, in positive territory in the morning, and the US move to pause all military aid to Ukraine is also expected to boost European defense stocks, which were already spiking up yesterday. Well, that's all we can take on this episode of Global Business Insights. Thanks for watching. This is Bode Oshosami.